just getting out of a webinar here. It is 3:23. I thought, I could wait till 3:30, but I just roll right into it. So we are live. I'm going to post this in my Discord, just saying that we're live now. And we're in Telegram here, live now. Okay, live now. www.youtube.com/Chris Pulver. There, perfect. In my Discord. Live now for final hour session. YouTube.com/Chris Pulver. There we go. So it's in my Discord, in my Telegram. Let's kick things off. Here we are. How are we doing? Happy Friday. Pretty solid week, if I do say so myself. I could have kept Netflix running for the entire day to grab that full profit. I had a 250 by 250, or I'm sorry, a 750 by 752.50 bull call spread on Netflix earnings, and that ended up paying about 50 cents a share, or 50 cents a contract. I also went in with a 720 and 722, or a 725 by 727. So I stacked up two bull call spreads, 2 for 2 on the winning side there. And had I done nothing, the both trades actually would become full profit. So the nice thing is had I done nothing, that would have been about $1.73 in debits for $5 in credits, which nets me about $3.27 credit, which is a nice little return on capital. The first trade, because it was a little bit higher, and we spent the last 4 days going down. I mean, literally this week, Monday, Tuesday, Wednesday, Thursday, Netflix pulled right back to this 50-period moving average and then ripped up here on really solid earnings. The growth was pretty solid. They beat earnings per share by 5.56. Their subscriber growth was probably the highlight of it. They're up to the highest point in subscribers. They are now have been and have really cemented themselves as the king of streaming. Let's just give props to Netflix for being the coolest thing ever, kind of. I mean, I've had Netflix since the old DVD days back in the early 2000s. I've owned the stock at the same time. And I was pretty lucky as an early investor when I'm like, this concept's pretty cool. They're publicly traded. I'm going to buy some Netflix. Apple, this iPod thing is pretty cool. I listen to music all the time. I take it everywhere. I'm going to buy some Apple. And those have been legacy stocks for a long time. And they're now, Mag 7, they've been top holdings for the last 5-10 years. I mean, you've got the FANG, you got the FANG Man, you've got Netflix in the top 10. And, now you've got Jake Paul, Mike Tyson fighting at some point. Hopefully there's not a death involved in that fight, but Netflix will bring you live sports and live action. But anyway, happy with the trade. And more impressively, as I'm happy with what all traders are doing this week, we went 14 for 15 in my daily profit play this week. That's pretty stellar on just that strategy alone. We also notched another 3 big wins on the SPY this week as we had some nice levels hit. 585 was called out on Wednesday. We stacked up some orders, took some nice wins there. And today we are back up trying to test those highs from Thursday. Didn't quite get there, but just a nice slow, steady melt up all day. Pulling back a little bit, just shy of that 585 handle on the SPY. Take a look at the markets right here. We are sitting right near those highs, right near those highs. And interesting, like next week we have earnings. This is going to be really busy next week. Let me check in the chat here, see who's popping in and saying hello. So next week we got a ton. I don't know if there's a print in earnings. Let me go to Stock Twits here. So Stock Twits, let's go to earnings. Let's see how many stocks we have reporting next week, because this week was heating up a little bit. Next week is a lot bigger, and the week after that is even more ridiculous. So the next 2 weeks getting really, really popular in earnings. We have, let me just do the numbers here for next week. We have 43 plus 40 plus 46 plus 15. We have 144 stocks reporting next week, and the week after that, so starting the 21st, we start heating up even more with just the quantity just pouring in. 36 and 71, 134, 173, and 28. So yeah, we're making some big jumps here. 140, 150 stocks reporting, 442 the next week. As we go into the end of the month and as we get into that ever anticipated election, I am seeing the numbers that are pretty interesting. If we go to, I think the website is you can go to Pollster or 538. This one's pretty interesting. Let's go to the latest polls. I was seeing something like 56% right now favoring Trump. I'm showing what? Progressive Institute. I mean, I don't know. I don't know why I look at this site. These polls don't matter. I guess they do. I feel bad for all this data and stuff that goes into it, but I don't know. Let's find out. National polls. So this shows Harris at 48.5 and Trump at 46.1. I don't know. I guess it's closer than I thought. So my newsletters that I read this morning had a bit more of a commanding lead for Trump. I don't think it's going to matter. I think it's going to be, gridlock in Congress, which is perfect for the market. The Fed is likely going to see a weaker, a weakening with probably one or two more cuts. I mean, that doesn't seem to be changing much on the Fed watch tool. Probabilities have now climbed to over 90% for November, which is the day after the election. Look at that, 94.4%. We're going to cut another 25 basis points. December, this one's actually changed a little bit. It was up in the 80s earlier this week, now 76.7, that there's going to be another 25 basis points, but still, that is the probability, which means that we're looking at a cut in November, a cut in December, and even a potential cut in January before the Fed pauses. And that's probably going to be inflation dependent. That narrative is probably going to come back in a big way after we get through maybe Q1 of next year. So we'll see. We'll see what happens. I think the markets have a lot of potential seasonality to just continue to go higher. I'd answered questions earlier in YouTube where somebody asked me, Chris, are you worried about the stock market falling or worried about the S&P falling? It's like, of course, as I should be. But the way that I'm worried about it is I'm protecting. So I've got some hedges. Look, I can't hedge to like protect all my gains. I mean, I'm sitting here at fresh highs for the day, nearly $27,000 on the day, up about 268 grand right now. And that's great. I mean, there's no complaints for me. I obviously want this to keep going and keep trending higher. But the reality is I've got to play hedges and I got to protect to make sure that if the market's going to have a nasty, 3, 4, 5% pullback, a 10% pullback, well, I mean, then we clearly have something bigger happening that the market's not anticipating, right? So if we go to just the simple chart of the SPY, we're sitting here at these all-time highs. The Fed's already cut in September. The market likes it. I don't know if the market's actually priced in the other two cuts. Maybe it has, maybe it hasn't. But if we get September, November, December, January, that's 4 cuts when the Fed actually said that they were going to cut maybe 1 to 3 times. So, I mean, technically they would be cutting 3 times, September, November, December. They'd cut 3 times in 2024. But if they cut again in January of next year and even into March of next year, I mean, we're right back on that same cycle of, man, the Fed is cutting pretty seriously. And even at 25 basis points a cut, it's still, it's still quite a more dovish policy. But it's interesting how they're cutting at all-time highs, and this is either a complete reset to the current cycle that we're in, and we continue this party going for another year or two, or this is just a late cycle, kick the can down the road, hope we can get this last final puff and get some momentum and some drifting to the upside until something more ominous happens. And I don't know the answer to that. But I would say that overall, our markets are pretty well postured look, the economy's been pretty resilient. I don't think it's fair to say that everybody's doing great because we've got, the K-shaped recovery has been the same thing since COVID, right? Those that have invested are doing pretty darn well. You've got houses at all-time highs. So if you're sitting in a house and you own the house at a dirt cheap mortgage rate, 4% or less, you're happy as a clam. Everyone else that's trying to buy a house hates it. I'm in that, right? I sold a house this year. I'm looking at a new house for hopefully April of next year. I'm hoping that the Fed cutting rates actually shows up and reflects in a 30-year mortgage, but I don't know yet. And, those that are living paycheck to paycheck, costs have gotten out of control. We've got everything more expensive. It does feel like crap out there. So, I mean, I look, I'm on both sides of this, right? I've actively invested and that's been very good. But at the same time, month to month expenses, I get it. I see how people are not happy with this current environment because it feels like crap. And it seems like, oh, it's corporate price gouging. No, it's not. It's inflation. It's not price gouging, right? I mean, look, the consumer is pretty darn powerful. If the consumer stopped buying stuff would get cheaper. But somehow we are stretching ourselves thin where we have enough money or debt or something that we're willing to say, like, it's okay, we'll figure it out. I'll just keep buying myself some time until I figure it out. But eventually that probably catches up. So if the consumer ends up cracking in a big way where the top end consumer cracks and the lower end consumer is already hurt, they pull back here, then things follow, right? So, I mean, either way, it's like it's going to end sometime. It's going to, like, this party stops and goes back to like normal. And there's going to be a harsh reality check, just like we had, back in 2022 with a legitimate bear market. Something worse and more insidious, like a global conflict, another war, crazy amounts of geopolitical tension out there that could escalate and burst into a war. Who knows, right? Or as we keep talking to, it's like maybe we just buy and print and spend our way into a fiscal crisis. And that's the bigger thing that nobody's talking about because that could be years down the road. But once it gets there, that could be probably one of the most dangerous things. So I don't know. But either way, I think we're pretty well postured. I'm sick and tired of the doom and gloom because it is so wrong right now. And like I said, I'd rather hedge my fear so I know that if we have a nasty spill, I'm protected. So I trade a lot of MES, I trade a lot of MNQ. I take those partial hedges for maybe $500,000. And if they pay out and they pay out in a big dip way, it's like I can turn a $500 hedge into maybe $3,000 to $5,000 in profit. Now, that's not going to offset any type of crazy downturn in my entire portfolio, but it's enough to also weather the storm and maybe stomach a 2, 3, 4% drawdown because I can quickly gain that back. So, anyway, there's a lot to plan for. There's a lot to be uncertain about, but something tells me that this market may not care at all. We are so close to 6,000 on the stock market. The S&P 500 is so close to 6,000. The SPY is so close. We're within just a couple percents, right? I mean, my gosh, we're talking about less than 3% away from a 600 SPY and a 6,000 S&P. We're talking about the Dow also hitting fresh highs again today. I don't know how many highs it is for the Dow, but it's got to be right there. We've had 46 or 47 all-time highs this year on the S&P, and we've got to have a decent amount on the Dow this year. The Russell, unfortunately, had a red day. The NASDAQ is up a little bit, but still not above these recent highs and not above the all-time highs. We go into the VIX that has retreated quite a bit. I mean, look at this. Back in, this would have been the top here. October 8th was the top in the VIX, and we have gone down and retreated percentage-wise, probably a decent amount. So the VIX has retreated around 20.5%, and the stock market has been able to carve out some all-time highs lately, right? Go to the dollar index. The dollar index I noted today in an earlier session is starting to turn for the first time. I'm not ready to call this as the top on the dollar. Okay, I'm not there yet, but I am watching this area very carefully. If the Fed is going to come out and the market's going to anticipate, and I've mentioned this inefficiency for weeks now. Number one, if I had traders getting long here, I was calling out this area as watch this level for profit protection if you're long the dollar. So those that have been following me, taking some gains on the dollar pairs, it's time to take some profit, or at the very least, move your stop losses, eliminate all risk, and try to trap some profit. If it wants to go higher, cool, trail it. But if it wants to turn, this is about the spot that I'm looking at resistance to form. So, point is, I mean, we're going to have some indecision. I wouldn't be surprised to see this come up here, fall a little bit, and then we'll see if the market's determined to then take it back down to the lows. If that's the case, dollar returns into some weakness territory that gives the runway for the market to continue to go higher. I think that's the melt up that we see is if we get dollar weakness and it's good for risk appetite, you're going to see a lot of money flowing into riskier assets. Could be a great run for Bitcoin, could continue to be a great run for gold and silver. So all these things are pretty darn good. Okay, so I'm looking at the dollar closely. I'm watching this yellow zone. I want to see if there's some price action in here that I can pull out on a smaller time frame and try to find some confirmation, then look at resuming some sell trades on the dollar. If we go to oil, oil is right back down to those $67.50 to $66 lows. I did talk about this in natural gas this morning. This is one instrument that I am watching. So I have some chart alarms set because I'm interested in a couple of longer term credit spreads on NG. And what I'll probably end up doing is going out to like an April or May contract and looking at just a bull put spread. So I can, sell the $2 and I can buy the 195 and it's probably a 1-to-1. So I could get like about $250 of profit for a $250 risk. And I'm looking at, out to May of next year. Is it up above these levels? If so, then I get paid. So I can go out in the future and I can trade those like really simple option trades, have a very defined risk. And I think that's a pretty good trade if those alerts get activated. Gold, again, a nice little all-time high got notched. The biggest pullback we had here in gold this last month or so was only about 3%. So the gold bull market continues to look extremely healthy. Unfortunately, I'm not buying gold at these highs. I'm just simply letting it run. I'm in GLD. I'm in gold futures. It is continuing to pay out really nicely. I'm accumulating more profits as it goes higher. But I am still waiting to add to that position. I'd like to make my gold trade bigger. I'm just not willing to buy at the highs. And that's, obviously I'm missing out right now, but I'm still going to exercise some patience. Okay. Silver. Oh, baby. Oh, baby. Let's take a look at silver here. So if I go to silver, let's go SI. Currently up around, let's see, that's $9,700 in SI futures. And that is, survey says on SLV, $41,700 in SLV. Let's frickin' go. That's a big rip on silver. And we are taking out this high. I have been patiently waiting for this high to get taken out for literally weeks. And now that we are off and running, ladies and gentlemen, man, if there's any pullback, that's pretty fantastic. I think I might just look at, let me see if I can just get an SI trade in here. So let's go SI, go to the chart. Okay. So SI with a low around 30.40. Let's go to SI right here. Let's go /SI futures. Now, I've already stacked up a bunch of orders on silver. So I have December and I have January. I think I put in some Novembers in here. Yep, Novembers. So let me take a look at the contracts and see if I can stagger in some other ones. Now, I obviously can stagger in some different strike prices, which doesn't change anything. But let me see. So I've got October 28th. Let me see if this is low, low risk, 30.40. Let me see what this looks like. So if I go October 28th, 30.40, this one's going to pay next to nothing. 30.40 right there. Yeah, that's just totally backwards. If I did this more at the money, so if I did an at the money credit spread, I get, it's a 1-to-1, so I risk 620 to make 630. I mean, we could obviously go higher. I'm going to see, so this is at the money at 12. Let me do this. I'm going to try to get a pullback here. Can I get a pullback on SI to 32.50? 32.50, because if I can get a pullback there, again, I'm going to look at that trade. Let me see what this actually costs. So if I go October, let me see this. So clear, if I jump in a January, which I also have some spreads out to January. Just let me, I don't want to make sure that I'm overlapping the strike prices here. So my January expirations are in the low 20s and 17, so I have no problem overlapping that. Could I get a pullback 32.50? So 32.50, if I buy that call and I sell against it, that's not awful. It's not awful. So it would cost me $600 in buying power. I get $580 in profit if that is fulfilled. If I go at the money, then it's going to be a little bit cheaper. 10 cents on the trade. Now I do like that trade. So if I get a 10-cent fill at 32.50, I'm going to try for that. So I'm going to buy the 32.50. I'm going to try this for 10 cents. So a 10-cent fill, that should give me a bigger profit. Yep. So if I get this filled, I get a $750 profit for $500 risk. I'm going to take that trade right there. I need price to pull back a little bit for me. If it doesn't happen, it's no big deal. I'll let my SLV run, which is one of my bigger positions. I've got like 300, 500 shares on a lot of the SLV accounts, and that should run for another like $7,000 or $8,000 in profit if it hits my target one. And if it goes higher, I can probably turn that into another $20,000 or $30,000 on top of that. But for this trade, if we get a pullback, maybe this is a sharp move, pull back towards 32.50. I mean, I'd love to get a trade around like 31, but I'm going out far enough that this one should be okay. So let me see if I get filled here for 10 cents. And that would pay me about $750 in profit for $500 risk. I'm going to take that trade and put it in pending. So let's go review and send right here. So 10-cent pending. And I'm going in for all accounts, working. Make sure this is good for everybody. That's working. That is canceled. You gotta be kidding me. I thought it was, what was the Pineapple Express thing? Let's go. Oh, not replace. I want to go to similar. Let's try this. Try that. There we go. That's a working order. Okay. So similar. All right, getting these orders in. Okay, this one get popped in. That one's pending. Yes, pending. And then last one will be this one. Okay. Got it, got it, got it. Right there. All right, so that is pending. Throw this in the tracker. All the little steps for all the little trades. All the tiny fibers. There we go. So SI, a 128 expiration, 3250 by 3275. So 750 max profit for a $500 max risk. All accounts. All right, so we'll get that posted in my Pulver alerts. Let's see here. Penny, what's happening? Happy Friday. Another win on daily profit play. I did not hold it all day. Doing so is not for the faint of heart. I hit 100% stop loss. But the chart showed that it was it, and then it reversed. I will end day with 100% profit. Ended $1.40. Expire worthless in 20 minutes. A lot of contracts. All right, Penny. Painful but profitable. You have been one trader that has said that repeatedly. So there's got to be something about that pain and that sweat that you love because you seem to be doing it a lot. No one should do this unless they stand the loss. Yep, you got it. Well, congrats on hopefully the next 15 minutes making a good trade and a nice win despite sweating it out. So I'm happy for you. Just be careful. That's all. All right, let me throw this in. So this will be a futures trade in the futures trade here. So /SI 1. Oops, I got to edit that. Edit. 1/28/25 expiration. I'm buying the 3250 call. And I'm selling into the 3275 call. 10-cent debit. Pending. 750 max profit. And $500 max risk. Need price to pull back a little bit to fill, then let it run higher. Okay, let me put that trade in there. Okay, that trade is in for SI. I don't know if I'm going to get much of a pullback, but usually a candle like this goes pretty checked. I mean, you can see that all these big breakout candles we have seen, an aggressive candle does get checked eventually. A big bullish candle gets checked. A big bear candle gets checked. We don't see a lot of it in here outside of some gaps, but that is as Samuel L. Jackson says in Pulp Fiction, that is a tasty burger. So that is a tasty looking trade. I like. Now, obviously, I hope in the next, hour and 13 minutes before the futures market closes that we see this candle staying bullish like this and actually clearing these highs. So what I'm looking for is if we go up and we pull back, I'm looking for that to be my fill and then going after my target. And as long as we stay above, 3275, then I can get full profit. And the nice thing is with $750 of max profit, I don't have to wait on this trade all the way to January. If I've got 750 of max profit and we're up towards this technical level for me, this might be trading for, maybe it's trading for $350 of profit. Okay, maybe $400 of profit. I'll take the trade. I'll take the profit. I don't care. I think that's a good just little income play. Okay. All right, so that's a little SI action. Bitcoin up to 68. Okay, Bitcoin. Look, this is going to be kind of a make or break weekend for Bitcoin to see if this is truly going to be a breakout. This is the first daily candle we have had in literally months, going back to March of this year when we started this consolidation cycle. Wow. I mean, we have not had a single break. Once we hit 0.1, 0.2 back in May, we have not broken above it, and we're testing it again. If this candle can close, I want to see what happens over the weekend. If Bitcoin is an open space up here, I love a pullback, and then we're looking for hopefully another nice little pop on Bitcoin. Let's go. So let's see what happens. But of course, if we reject, then it's right back where we started, and there's maybe a dip coming back into this area, more accumulation needed, and then another breakout and more of a convincing breakout and confirmation is going to be required. But if we have a big weekend in Bitcoin, it is quite possible that we come up to maybe test these all-time highs, and then we see what the all-time highs are made of. Okay. That is great stuff. Penny just slaying it on that daily profit play, up over $25,000 in broker account, and up over $11,000 in IRA. I'm more conservative in the IRA. Love the daily profit play. Penny, I thank you for sharing, because that is a true testament to those profits. That's just straight crushing it. So I'm going to take a screenshot of that comment along with this, because that's awesome. And we got to share, right? Good stuff. And kudos to you for just having the guts to hold some big contracts like that. But I mean, look, the trade, the strategy, the mechanics, and the risks. So keep doing it. Keep up the good work. MicroStrategy. Wow, what a big day on MicroStrategy. Up 11%. FBTC up 2.76. IBIT up 2.72. BITO up 2.68. Okay, this could be pretty exciting. I'd love to see some runs on Bitcoin. If we get this move and IBIT, BITO, if those start to make some really good runs, this trade could be pretty solid. I took a 2-contract trade for $5, so I'm in for about $1,000 debit out to next, not 2025, all the way out to 2026. So if there's a decent cycle on Bitcoin that gets us up into these highs, I can turn about $1,000 into around what would that be? 19, because I bought a 14, gets up to 34. That's a $20 rip, right? So 34 to 14, that's a $20 rip. I paid $5 for the debit. So $20 minus 5 gives me a net 15 at 2 contracts. So I can take $1,000 risk, turn it into $3,000. That's a pretty good trade. I hope it gets there, and I'm giving it plenty of time. And I'll see, how quickly the underlying moves, and see what that profit looks to be. IBIT looks a lot more like Bitcoin, which is great. And I'll be watching this high right here, because if we can crack those highs and go higher, let's go. Okay, let's go. FBTC, this is Fidelity, same type of thing. Watch those highs. Watch those highs right there. Boom. And the nice thing is crypto, Bitcoin is open 7 days a week, 24 hours a day. And we'll see what we get. MicroStrategy, nice little turnaround. These trades are looking pretty good. These were all just when we had some sell-offs here, a lot of high IV. I sold a lot of puts, did a lot of ratio spreads. I'm willing to own the shares once they did the split, especially when to own the shares. And MicroStrategy continues to be pretty solid. Ethereum, come on, Ethereum, you can do it. I need Ethereum to get back above 28.15. I want to see this EETH get it back above 60. Let me set a chart alarm here at $60. That's like a $700 per contract trade if I get it. And anything else here? Nothing there. Copper is turning around. I'm not in copper right now. I'm going to wait on copper, but China's starting to speak back up again, which is nice. Japanese yen, Nikkei, no big deal. This is out to 2026. We go to the DAX, up to all-time highs in Germany. Go to the FTSE, still chop suey on that. Hang Seng has at least responded a little bit for the last couple of days. We got another like $100 billion in stimulus added from China. What else? Apple, Mag 7, up near all-time highs on Apple. Amazon, 188, still having a hard time breaking. We've got earnings on Amazon coming pretty soon. This is out to the end of the month on the 31st. I do wonder on Amazon if earnings is going to get us somewhere better. Earnings could get us back up to these highs around $200. Earnings could also be not so hot, but I have put if I need it. I'll also re-up that through. So that is through the earnings report. I didn't pay a lot for that debit, but if we have a big drop, I mean, I'll see something to improve that. But otherwise, if we have positive earnings, then to the upside. Let's see what happens. And I've got a covered call at 210. So if we get there, that'd be pretty sweet. What else? Google. I don't mind some Google. Current levels is fine. Current levels is fine. I don't mind Google. I would prefer it down here. I just don't know if we're going to get it. So what I might be looking at on Google would be maybe I do this. Maybe I go out to the end of the year. I think I'll take this trade right now if I like it. If I buy something on Google right now and I try to get out to this high by the end of the year, if I just did like a simple bull call spread, debit spread as opposed to credit spread, I would be considering a credit spread down here because I wouldn't mind owning shares if it goes cheaper. But if we do a defined risk bull call spread and we just go above this by the end of the year, that's a pretty easy income trade. And I'll do probably this. I'll go like 1 or 2 contracts here. So if I go 1 or 2 contracts here, and then if I go, let's say I do 1 contract here, well, I do 2 down here, right? And I'll just kind of play the area. So let me see if Google can actually go higher by the rest of the year. Let's find out. So hopefully it's cheap enough to trade it. And let's check out what Google looks like for. Let's go to end of the year for Google, December 20th, earnings on the 29th. Let's have a look. So if I buy a 160 and sell the 165, that's going to cost me 270. Not a bad income play. If I take the trade here, it's 220. I risk 220 to make 280. Looking to see if Google can just get above 170 by the end of the year. Is that possible? 170 is not that far away. We'd essentially just have to get back in this level. Even if this is a range trade, if Google even comes to sniff out these all-time highs in any way, shape, or form, if this is a little reversal pattern, and this is going to get, try to retest those all-time highs, that's a pretty good trade. So I'm going to take a stab at it. And I'm going to go 1 strike in the money, which I know I'm giving it a head start. If I take this trade, I need price to move up about $1.60. Actually, you know what? This trade right here, I've got to pay 270 to make 230. It's a slight more risk than reward setup. But now I just need price to move up about $1.50 to get me into profit. So what do I like better? If this had tighter spreads, if I could go like, a dollar spread, obviously that'd be great. 250 would be fine. I'm going to take this trade as is. Let me see what this one cost me. 323. Yeah, I like this one better. So I'm going to go kind of at the money here. Buy the 160, sell the 165, pay 270, as opposed to trying to go 1 strike higher. I love the risk reward in this one. If I get paid on this one, it's a pretty good return. I get 286 and I risk 214. I get 133% gain on risk on this one, which isn't bad. But if Google does go lower, it's I don't know. I guess it's not the end of the world. But let me see here. Do I like that trade? We got to get up to 170 for this thing to be positive. I think I'm going to take the other one, just pay a little bit more. I'll do that. So I'll go 160 by 165 for 270. I'm just going to take a little income trade here. This is through earnings. I'll play around with the contract sizes if we go lower, but I'm going to let this one go out to December. Actually, you know what? Let's see what's going to cost me out to. I might stagger these both out, December and January. That cost me 270. I'm going to take the same trade for 2 different expirations. So I'll go 1 contract out to December, 1 contract to January, pay the exact same amount. Hopefully it gets filled. Let's take the December 1st one. So December 20th, 160 by 165. Okay, so I'll take the 160 by 165 for 270. I like that trade. Filled. Awesome. Okay, and then I'll get this ready for everyone. Similar. Okay. Uh, 270 got filled. 270 is pending. I'll take this one at 271. 271 got filled. Oh my gosh. Come on, man. 271. Let's go 272. Filled. Okay. A couple more accounts here. Filled. Filled. And let's get this last one filled. There we go. And now I will adjust this to the January and do the exact same trade and pay hopefully the exact same amount. Now I was paying for 272. I'll do the same thing again. So here, filled. So that's the January. Now I can go similar. Filled. I feel like the guy in Groundhog Day. He's like, Phil Connors, Ned Ryerson. Anybody? Let's go. This one got filled. Nope. So I got to go 7634. All right. Just doing the fills. Okay. That trade is in. So a 12/20 expiration and the 160 call and sell the 165 call, 2.70 debit, going after a 230 max profit per contract, 270 max risk per contract, and it is open. It's closing bell. So my gosh, I snuck those right in. That's good. Also the 117 expiration, 160 call, 165 call, 2.72 debit. So 28 max profit per contract and 272 max risk per contract. I'm staggering 2 debit spreads on GOOGL for end of year rally. If Google attempts to revisit all-time highs, we should be good for full profit. Also, if this trade reaches 50 to 75% of max profit, I'll consider closing and taking profits early. All right, so that one is in. Okay, so a little GOOGL, I get that in the tracker as well. Oops. So that's the 12/20 expiration and the 117 expiration. 160 buy call, 165 sell call, 2.70 to 2.7. Got to let somebody into the golf lodge. Dallin should be in. Debit. Okay, that's in. All right, all good. Are you holding any futures positions over the weekend? Yes. A lot of my futures positions are options. I don't have like just long futures running. I'm just pretty much all options. So here's my little look at futures. I have a lot of these are hedges, and then I have some credit spreads and some defined risk trades. So I have some hedges that I'm just going to eat, and that's unfortunate that I've paid a lot over this year for hedges, but it's paid out nicely. It paid out in April, paid out in July, August, paid out briefly in September. And I've also wasted some money too, but better to be safe than sorry. So gold futures I'm holding, copper futures I'm holding, micro E-mini futures and micro NASDAQ futures, and regular NASDAQ, regular E-mini futures. Russell I'm holding, silver I'm holding. So that's the exposure right now, but they're mostly all defined risk or they're hedges to the downside. So yeah, and I'll probably re-up some of those hedges But for closing bell, that's a pretty good piece. Up 25K on the day. Portfolio at an all-time high for the year, another all-time high, which is good. So no complaints there. And overall, pretty good day. So what else we have? Where's our chart? Anything you want to take a look at? How's everybody's week? Okay. If next week is another run-up week, earnings, but it sure looks like it wants to try for more up than I think SPX targets 59.43. I mean, that's a very specific number, but yeah, look, 6,000 is not that hard. I mean, we're within 3% of that all-time high. It would be interesting to see it hit there prior to the election, though. And I don't know if the market's going to have one of those years where it blows through it like this. I think this would be the weird thing. Does the market actually just melt up and go up and earnings is solid and the election's like being looked at like it's a non-event? But I could see the election being very volatile and maybe even spoiling some of the fun that we have had going this year. So we'll see, right? But I mean, I would almost prefer at least some sideways movement or a pullback prior to the election to give us something to say, okay, election's over with. Let's get out of the way. Fed's going to cut rates. Markets looks pretty good. The U.S. economy is resilient and healthy, and then we can still rally by the end of the year. But if we're just pushing before and we get up to these levels, I mean, I'm not saying that we can't go higher, but technically I'm way more uncomfortable watching that be the market. And I'm not, look, this doesn't mean anything about this. This line could be completely arbitrary. But technically speaking, it's like I'm watching that level. So if we get over 600 on the SPY, I wouldn't be surprised to have some type of pullback. But not my job to call the top and probably not a smart thing to do anyway. All right. So, yeah. Okay. So I think with that being said, I know we had a pretty short session. It's been a great week. I mean, everyone in the Telegram channel's done, phenomenal this week. We had a lot of stuff going on. I was in some webinars this week. I will say this before I go. I've got a busy weekend. I'm still working on some final content. I do have an exciting webinar on Sunday that I rarely, if ever, do weekend webinars. But the reason I'm doing it is because I have a strategy that I'm unveiling on Sunday at 12 p.m. Eastern time to get ready to trade with everybody on Monday. Okay. So if you are interested in joining my webinar on Sunday, it is right here. So I will post this link in the chat. So Sunday, 12 p.m. Eastern time. This is a waterfall income strategy. And I will be the only person in the webinar. It's just me. I'm hosting it. So it's you and me. And we'll be short and sweet. I'll probably go for maybe an hour-ish on Sunday. And then if you want to join the service and the course and the alerts, then you can get in class with me on Monday. And off we go. But you can register for that. Also, if you're registered for that webinar, I do have an inflation playbook that came. I think it's on the link there. If you click on it, I do have the download link for that, so I can share that with everybody on class on Monday. So I've got the inflation playbook there that you sign up for, and that's just a nice little thank you for attending the webinar. Okay, so that's going to be on Sunday. Daily profit play, we killed it this week, 14 out of 15. I'm really happy with that. Ended up making around, what was it? Close to $700 this week on just one contract. So if it was anything bigger than that, it adds up. If you're, penny, you're making thousands and thousands of dollars. So it's just all part of what you're comfortable with. But overall, I'm pretty pleased, pretty happy that no complaints. I mean, and at the same time, like, yeah, I don't want to be complacent here and think like, oh, this market's never going to go down. I mean, look, I've still got some plays on China. The stocks I'm watching for this week, you know what? Actually, what I want to check on real quickly is Pfizer. Pfizer, you son of a bee. All right, so that's cool. Pfizer, I get to put in for next week, and I'm going to do another covered call for another 20 cents. Yeah, I might do this 29. I can't do it now, but I'll probably do it on Monday morning. I'm going to roll out another sell call. I might roll it down just in case. I mean, I'm not sure if Pfizer has earnings next week. They have earnings on the 29th. This was my plan on Pfizer. I am trying to get this thing called away. And more than likely earnings, if it comes out positive, then Pfizer's going to rip up above $30, and I'm going to be like, oh fudge, I have 1,000 shares, and I should. But I'm already up right now. I think it's like $21,000. So here's Pfizer. I'm up around 19.6. Now, what I'm trying to do is get this diagonal spread I'm just chipping away at like 20 cents a day or 20 cents a week or 25 cents a week. And so if I do this on Monday, I'll see if I can grab another 20 to 25 cents. That should offset my cost by another $250, and in turn get me another profit, which this would be increased by, let's see, $250. It's like $1,600 or $1,700. Yeah, about another $2,000 of profit if I can get it called away at $29.50. I may lower it to 29. I think 29.50 is a bit of the sweet spot. We take a look at the stock price. It's low volatility, which is kind of why I don't mind just chipping away at it. It's been extremely choppy in here as we come into earnings. I would like to get this trade kind of closed and done before earnings on the 29th. So I've got one more week essentially to trade earnings to the 25th. So I might go a little bit deeper in the money and get it called away and just do the math on it. If I can walk away with 20 grand, 21 grand on Pfizer, I'd be pretty happy with that. And then I still have some ownership because I think realistically, this stock has done nothing good. So this has been in a pretty severe drawdown. They were just all in on COVID, and all of a sudden they're like, let's start moving into cancer. Let's start moving into weight loss. It's like, yeah, have you seen Eli Lilly stock? Get with the program, Pfizer. COVID is so 2020. Everyone wants to just eat and take Ozempic now, right? Fat Joe lost 100 pounds because of Ozempic. Kardashians. Everybody in Hollywood. Anyway, so, but I think as we're sitting here at this, cluster of moving averages, if we get a break higher, there's actually room for this thing to recover. I'd love to see Pfizer up to 30 some dollars. I own some shares and I'm trying to get it back in the mid 30s. That's my profit target. Just pulling back some of these fibs would be pretty nice. That's really all I'm looking for. Okay. Cost of the strategy, I think it's something like if you just do a 1 year with me, I think it's like $1,400 or $1,500. If you do a lifetime, it's like the upgrade's nothing. I think you upgrade for like $500, I think. So I can check, and obviously we'll check it out on Sunday, but I think the lifetime's like a no-brainer. And I'm trying to put in a lot of extra value to the lifetime because I want to do a bunch of extra classes for those lifetime members. But this is it's a really fun strategy. And 97+% win rate's pretty good. If you want more profit, I still got it boasting about a 93% win rate. And it's very much like clockwork, which is kind of my favorite way to trade. And just know how we have to manage trades, which is not that difficult. And I want to spend a lot of time with the traders in the classroom to show all this stuff. Okay. So I shared the link there in the prosperitypub.com/weekly windfalls. If you want to sign up for that, that's a Sunday webinar at 12 noon Eastern time. It's just going to be you and I in a Zoom session, and I'll record it. So if you can't attend live, I can still send the recording out. I'll have a direct link for that recording afterwards. But if you don't attend live on Sunday, then you don't take the trade with me on Monday. That's the plan. Okay. If you don't pay no tolls, then we don't eat no rolls. I don't know. It's that's Little John from Robin Hood Men in Tights. I feel like I've got some movie references floating in my brain today. Okay. Other than that, look, it's been a good week. No complaints. A lot of good wins. We had some bonus trades on the SPY. We had a lot of good consistent profits in the daily profit play. Earnings plays. I've got TSM cooperating. Netflix was 2 for 2. And TSM is at 200, and I need this to stay here, and it looks even better next week. So when we come back into trading on Monday, then hopefully this is right where it needs to be, and this $12 credit can turn into maybe a $10, $9, $8 debit, and I'll take some profit there as well. Let me see what this one is trading at right now. If I go to TSM, it is right here. So let's go TSM. 1, 2, 3, 4. It's probably traded for about break even. Yeah, so I got $12 credit, trade for 13, 17. I need the weekend to help it decay. This is the trade itself. So on I sold the middle and I bought the outside. That's an iron butterfly. And I did some staggered. I went slightly in the money on the call side and the put side. But either way, it's like if price heads down closer to my centers, then that should help my $12 chip away, maybe be $10, $9, $8 next week. And that would be pretty awesome. Okay, good stuff. All right. So I think that's it. Happy Friday. Any final thoughts? I mean, it's closing bell. Hopefully everyone had a great week. If you want to join me on Sunday, that webinar is open for everybody. I think on Sunday I have a VIP spot for like 100 traders. But if we have a big room, I mean, the more the merrier. So Yeah, I mean, depending on the crowd, if we get another, I don't know, let's say we get 300 to 400 people on the webinar on Sunday, then let's sign up 300, 400 people. Let's have a lot of fun, easy trade, and let's get cracking. Let's make a bunch of profits. Okay. Hopefully I'll see you on Sunday. Until then, happy Friday. Enjoy the weekend, and I'll see you Sunday at noon. Thanks. Bye.